Indian exchanges have lagged global peers in parameters like market cap to GDP, free float ratio, etc. We're catching up now. With increase in retail participation and tech penetration, how do you see all this adding up towards the next milestone for you?
If you look back 25 years, Indian exchanges have done wonderfully well given the percentage of GDP India holds vis-a-vis the rest of the world. But last 25 years will not be the good guide to the future. Last 25 years were basically about trading volumes. Internationally, trading volumes went up due to automation, the screen-based trading, newer instruments like commodities, currencies, interest rates, derivatives, and so on and so forth, and then algorithm trading and co-location facilities and many more. Even in Indian markets, the trading volume has gone up sometime between say 5,000 to 7,000 times. The next 25 years probably may not be the same internationally as well as India. In fact, if you look back 2017, worldwide the trading volumes remained flat. They didn't increase much despite the index is reaching all-time high all the time. And that kind of applies a little differently to India because India is still a very fast-growing country. But people don't expect that kind of volume growth that happened over the last 25 years. And we believe the way India was a thought leader in last 25 years in completely automating itself in market perspective, from screen-based trading to mobile to internet to depositories, clearing corporations, next 25 years are going to be very different, and people who can take advantage of newer financial technology framework that is coming in distribution, in risk management, in many other things, those exchanges will survive and thrive. And so for me, the lesson to learn is not following blindly, but actually creating your own path.
Okay. It's been a tremendous year for you, Mr. Chauhan, with high fundraising in primary as well as secondary markets. The government investment also moved into high gear. What volumes and revenue growth then are you penciling in as we move forward?
The Indian exchanges will continue to grow on both volumes a little bit and also on revenues because of the fact that newer companies are coming to list, newer mutual funds are coming, and mutual funds have now at least started paying for using the exchange platforms this month onwards, in fact March onwards, 2018 onwards. The currencies and interest rates, the newer sort of instruments are coming up, and so for me there are many growth opportunities for Indian exchanges. But BSE is also getting into insurance distribution, even commodities trading over next 1 year. So I think for BSE specifically, the times are very exciting in terms of using its skills and wisdom that it has within itself with all employees and also the entire network of brokers and their franchises and branches, that we think we can add much more value to the investing people's returns and also advise them well.
Mr. Chauhan, thanks for joining in. Now, SEBI is not for the convergence of the stock and commodity buzz. That's been a big positive development for you. When are we seeing a proper launch on this front, and what will be the basket to start with?
As per the announcements that has been made by the regulator, October 1, 2018 looks to be feasible for going live on universal exchange. And so we will await the newer regulations and of course apply for a new license for trading commodities as a segment of BSE. And we hope to start as soon as we are approved to go live immediately after October 1.
Now, the BSE promoted INX has recorded an all-time high daily turnover of about 3,280 crores for the derivative segment. How is momentum building up month on month before the revenue model starts contract charges?
INX was an interesting experiment started last year in January. It's around 1 year and 2 months old, very young, but it's now competing in terms of attention and trading volumes with the domestic exchanges in India, which are like pretty old. One of the days it did $500 million. It continuously does $300 to $400 million. If you look at it in $1 million, it may look small, but it's almost 3,000 crore in that range every day, and that's a pretty large number given the way Indian markets are operating. There were issues in GIFT City in terms of the taxation, especially for foreign institutional participants, FPIs, and that has been, I think, removed with the passing of this budget. The issues have completely gone, and now there is no CTD, there is no STD, there is no GST, there is no short-term capital gains, there is no long-term capital gains tax. Effectively, it provides all the FPIs the same tax framework as they would find in, say, Singapore or Dubai or any other tax-efficient countries, and that's where I think the GIFT City is going to take off. And if it does, then INX, as the Indian International Exchange, what we fondly call INX, is going to be the main beneficiary because it's the prime tenant in that GIFT City, and it's the first exchange and the largest exchange by literally 8-10 times compared to nearest exchange in that city. So I think overall, we are very happy with the progress that has been made. In fact, it has gone beyond, the success has gone beyond what we had expected for the first year. And today, of course, the charging and all is slightly further away because of the competitive pressures. But overall, it's becoming a very large market, and that's a great thing.
Okay. So what kind of revenue and profit contribution as well as market share gains are you expecting from INX in the next few years?
Currently, basically, we are not charging for the INX except for the bond, those bonds that are getting listed. So you will see some minor revenues coming up last quarter onwards, but that won't be significant because masala bonds, euro bonds, dollar denominated bonds, all those bonds are getting listed. But more importantly, almost more than 20,000 crore rupees worth bonds have been listed. And that's a pretty large number, that it's not only a market for trading in derivatives, but also for investing into Indian papers for foreign people. And that's a pretty large sort of opportunity. We don't currently want to discuss the charges because based on the competitive framework, we'll continue to see whether we can charge and how much we can charge. But we had originally planned to charge 20 cents a contract, and remains to be seen when we can start charging, because unless our competition charges, we will also have to continue to do things the same way.